Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and this is the 6th of November, 2019, just right on the button, 3:15 p.m. Central Time. So these will be the settlement prices in the stock indices, and given that another major setback, I think, happened today where the U.S. and China, again, haven't agreed on a date. You know, originally we're inviting them here, and if you think about it, they invited the U.S. to Macau. Well, nothing's happening, and now the question is it going to be a December signing, maybe in London when there's a NATO meeting? Nobody seems to know, but it's, again, a pushback. And on that pushback, you saw the stock indices get hit, not dramatically. When I heard that, we were sitting here, I was figuring maybe you go down 200, 250 points. Nothing like that occurred. You went right down to some key support areas, held them, and the market stayed up. The gold soared, and it held most of that gain. Bonds and notes also rallied on the news, and that news was bearish initially and kept its bearishness in the energy complex. So let's take a look at the charts and see what we've got. On the S&P, this is a new high weekly close, but we're not the end of the week. You know what I'm saying? We're just showing you where the close is, but you really want to look at it on a weekly basis on this chart. So we're up for the week, 12.5 points, and that's where you're at with 2 more days to go. The bias is certainly up. When we go to the daily bar chart, you can see you're not near those all-time highs. This is a nice, solid close, no question about it, but you've got a bit of a pullback occurring right here. You still have the pattern of higher lows, higher highs in place. The market now has the 18-day average of closes in red over the last swing line low of 30.20.25. So now it's at 30.23. It's advancing at about 3 to 5 points at a day. So I'm expecting it tomorrow to be 30.28, 30.30 range, something in there. And the reason for that is you're dropping the closes back here. And since this is a moving average of closes, that's what you're looking at. Okay, so it should be up again for that market. The resistance, I think it's very clear. It's the upper Bollinger Band. The market's having problems with it, but as long as you keep the embedded slow stochastic reading, it tells me that on breaks, even like today, the traders are waiting for the market at those key moving averages. Now, for those of you that are in my morning subscriber services, I named that address in this morning. Well, I do it all the time for you. And I showed you what I thought was going to happen. I had no idea of today's event. Worked out pretty much as we were talking in the morning formations. And this market, as long as you keep that, I'm friendly. Lose this embedded reading. Embedded means the slow stochastic has gone up and over 80 for at least several days and maintains that. It converts the market from being overbought to locking in a trend in this indicator, this oscillator of momentum, and I call it embedded, locked in. I could have said locked in stochastic, but I called it embedded. I like the sound of it better. And as long as that stays in place, fine. Lose it, and I'd look for price in the 18-day average as a minimum to make a run at each other. Does it have to happen? No, but more times than not, it does. If you take a look at the NASDAQ, you got up 3 days ago to the upper Bollinger Band. Even yesterday, you're pulling back, but pulling back is not breaking a trend. You still have the embedded reading. You still have the pattern of higher lows, higher highs. This market's still on very good chart footing. In the Dow, this market said, what about me? Because if you take a look, you head back here, and I want to come to this. Let's see if we can find 3 days in a row. Both numbers here are not over 80. So now we get day 1, day 2, this October 29th, day 3. Then the market gets a correction for a day. The one thing I teach you is that you can lose that embedded reading for a day. You can get it back the very next day is the only time it can come back, all right? So it's now re-embedded itself. If it were to lose it in short order again, that would be a sign of weakness. Instead, it keeps it. This is Monday. Tuesday, and today. So always keep your eye. What is that market doing? And the advantage is you close at 4 o'clock, you reopen these markets right after 5, you get to see what those numbers are doing. In this case, still bullish. Lose that reading, I'll change my opinion. Don't see it, support. And this is what I'm liking in the indices. The 18-day average of closes is now finally in most of the indices over the last break low of the swing line. That's a sign of strength in the markets. In the Russell, notice how it got to that black line, the upper Bollinger Band. And what I teach is the first time you hit it, it's often a zone that the pros take some money off the table. Now, I'd be watching this very, very closely tonight. Remember what I just said. We finished trading at 4. I know these are the settlements. They're determined at 3:15. But then I want to see when it reopens, does it lose that reading? You don't want to get the word stochasticitis. Stochasticitis, say it, it's a mouthful, where you're watching every flip in it. But when I see that arcing like that, it's got to stay strong tonight, or at least on the opening, and I won't be too worried. On the other hand, it's hit an upside target. You can afford a pullback here. In the VIX, we had a run-up today, got as high as 1339. The 18-day average is at 1342. You lost the embedded reading. You lost it yesterday. See how this reading got up to 22? It's a flip-flop of the bullish one. So it lost its bearishness, closed over 22, and today, another day where you're over 20, it can't gain it back. So I have a market that's oversold. It's rallying into the resistance of what I call that line in the sand, that 18-day average of closes, and it's in an uptrend on the swing line. Because the settlement's under the 18-day average at 1288, the bias is down. So I have a market that's now disjoined, let's call it. I've got momentum trying to go up, the bias down, the swing line up. Nothing to do there. In the Nikkei, you still have your embedded reading. Again, I'm going to say it. You've got to look at these Bollinger Bands, in my opinion. First time you hit this area is often a zone that tries to stop the advance. That doesn't mean you can't lock into it and ride it higher. There's nothing bearish on this chart, is my point. Yes, the pattern here got ugly when you took out these lows, took out that, and then it tried to regain it, but you still don't have a pattern of higher lows, higher highs. You have a market that has stayed with an upside bias since the end of the first week of October and just hasn't given it up. In the T-bond market, first challenge yesterday, and we'll come to that, of the lower Bollinger Band. It's the same thing I teach on the upside, and it doesn't mean that the market can't just go sliding through it. That's not what I'm saying. Take my charting course, you learn a lot of this. I might even redo the course. You know, every couple of years I like to do it and throw more things into it. But you hit it. That means to me I'm looking for a bounce away from it. You had that bounce today. Resistance between the 100-day average, the 18-day, oversold market, higher high, lower low pattern. The chart's nothing that I'm in love with. 10-year note. Yesterday, you got down, finished underneath the lower Bollinger Band at 128.29 to 129.01's that number. 5% of the time you settle above or below these black bands. Today, market up 12 points, back over it. Pretty stiff resistance at the combination of the 100-day and the 18. And I'll be watching this. You might get a bearish crossover where the short-term average, the 18, gets back underneath the 100. That's a sign of what? Weakness in this market, which means higher yields coming out. Still oversold condition, though. TLT, you got down to the lower Bollinger Band, you're bouncing. Again, a pattern of a lower low, higher high. There's a common theme in the interest rate sector. They're really not trending at this point. They certainly have downside bias, but they're not trending. Nor are you really trending in the dollar index. You've got a lower low, a higher high pattern. The market managed to squeak out back over the 100-day and the 18-day average of closes, but like a marathon runner, it's exhausting itself in momentum. It's coming up to a very overbought condition, nowhere near converting itself from overbought to locking in an embedded reading. Resistance, 98.11, let's call it. Support back at these two numbers. Again, I don't see a trend on that. In the eurocurrency, you're in a downtrend, but it's the flip-flop of the dollar. So this market's pushed its way from this level all the way down, got oversold in the process. I don't know if it's got the momentum to drop back down here. I was today interested in how the dollar would react to hearing that there was no signing of a trade deal on the table. We all thought originally it would be as early as a week and a half from now. Now they're talking December. You just don't know how these things are going. We don't know the terms of the deal. There's so many unknowns. All of these markets absorbed it fairly well. This market had a lot different to deal with. The IMF today came out with a very scathing report on the European Union. And it is telling them, in plain English, get your act together, get your countries to do something. It was highly critical of Germany and the Netherlands. Read the report, you'll see what I'm saying. But in any case, you've got lower highs, lower lows. You're in a downtrend. The bias is down. You're just oversold. Resistance back at 111.44. In the British pound, 2 days in a row where you're just hanging at this 18-day average of closes. The elections, the run for the election is the way I should say it, officially began. It's going to be mudslinging, everything going on there. The IMF again talking about what could happen. Without a Brexit deal, they are predicting, I'm talking the IMF, within 2 years a hit of 3.5% to the GDP of this country and a half point to the European Union. So there's a lot on the table for everybody, but you've got a market that is still with higher lows, higher highs. It looks as though the settlement today is going to be under the 18-day average, so the bias is down. Momentum is down. You have a market that's in a state of flux, sort of just hanging at that line in the sand. In the Japanese yen, the first challenge of the lower Bollinger Band, and this is, let me show that. Here you are coming in, this is Monday's action. Tuesday, you go to that number. Hey, the sky's caving in, the sky's caving in. Well, today you bounced away from it. The sky didn't fall in. You're oversold, not a trend. Currencies are difficult right here. You've got a higher high, lower low. I don't see any of the currencies throwing out clean trends. In Bitcoin, I got my act right on this. Here's your lower highs, your lower lows. Yesterday I had this, I think this arrow was pointing up, it was wrong. But even though you have the swing line down, you're overbought and you've got bias up. I don't see anything in that market of interest. In the Brent versus January crude, if you take a look at this rally you'd been having, it's pretty good. And the neutral line to me is the red line. That's the 18-day moving average of closes. And you went right back to that today and you're just sort of hanging right there, waiting to see what's going to be next. When you come to January Brent, you got up to your upper Bollinger Band again after coming into this support. To me, that's where I think the pros are taking some money off. And I know you're going to say it went higher. It's not what my theory is. You're in a zone where the pros are taking some money off the table. And today, there. Now, where's the support? Two numbers here, 60.50 to 60.47. Now, keep your eye on this momentum. This momentum is overbought as can be. So seeing this market slip a little, that's interesting. A key reversal day. Why not just an outside day down? It's the highest high that you've made since this break low, and you had a reversal. You opened higher, you closed, you made a higher high, closed lower than the open, and you took out yesterday's low. In the WTI, same thing, same zone. At the upper Bollinger Band, overbought. I think the smart money's taking some money off the table. Now, admittedly, if the U.S. and China don't sign a deal, it's probably not friendly for the energy markets. Gasoline market, overbought. Momentum today turning to the downside. So again, that upper Bollinger Band area, I think the pros were coming out up there. I see two levels of support here. What you don't want to take out is 155.64. That would break the chart pattern. Barring that, I think the pros want to see the market get away from an overbought condition. Last, in nat gas. We know it's going to get cold, but remember, futures markets build in the future. We're going to see tomorrow the EIA number. We'll see if they exceed the expectations for a build or if we had a good draw. And then, of course, we've got to see how cold it gets and what we're going to use. I think the market spent a lot of its energy here. I'd be a bit cautious as in the overbought condition that could embed, but it's just not there. We write about everything you're hearing me talk about here in detail throughout the trading day. Now, I don't sit and write like that. I do videos during the day for my clientele. I start shooting one at about 5:30 in the morning, and it's published before 7 a.m. each day, and I bring them up to date with what's going on in Asia and Europe. We then, during the daytime, our staff here, and we have a pretty big staff, they're writing away as to what's going on in these markets and bringing you up to date with talk that traders want to talk about. Options, futures, spreads, what's going on, where it's going on, and how do you see it. If you haven't seen what we do, let us put it in your hand. It goes into your mailbox, your email, or you can read it right through our charting software. Go to our website, sign up for one of the free offers. You can call my staff. They'll right at the phone, they'll pick it up, they'll talk to you, although we do go home at night. And remember, right here, you can click on this icon, you'll get there. A little lengthy today, but a lot to talk about, and I'll see you tomorrow.